Follow up on
Adam?
that, Ashraf, with
Okay.
your neutrality in the euro and your negativity in pound. Does the euro pound make sense in 2016? We recently bottomed at the 70 level.
Yeah, I think it has bottomed. I really think it has bottomed, and I think, but it's going to give us. It's one of those pairs that is going to give us a hard time before it pushes higher. It's like the Aussie CAD. The Aussie CAD was stabilizing, and then when it took off, it took off. And I think that the euro sterling, it's going to take a while before we're going to go, 73 and 75 and 74. But it's gradual. I think it's nice. It's a boring trade. You keep it on. But I think there's more fireworks in selling the dips, the rebound is in sterling yen and sterling kiwi and sterling Aussie.
Okay. Go ahead, Adnan.
Any strong views on the pound, Adam?
Listen, I have a trade on the pound, and I pray that it happens because England wants to have a referendum on the EU, and they'll stoke all these fears and fear about the England leaving or Britain leaving the EU, and it's not going to happen. They're not going to vote to get out. Cameron isn't going to push them out. Nobody wants to change. Businesses don't want to change. It'll be just like the last referendum in Scotland. And the trade, I think, is to buy the pound on that dip, on that trade itself.
Okay. Boris, do you want to add something on the pound?
I think Brexit is the primary thing that's driving pound lower. I think if you look at cable objectively, it's the best economy in the G7 right now. We're not saying much, but it is the best economy in G7. Best wage growth, best growth period, best unemployment figures, best everything. The fact that they're so dovish is a function of the fact that the Bank of England is scared as hell of Brexit, and the market is scared as hell of Brexit, and that's why cable is actually down against the euro. The euro pound should be at 70, should be at 68 on any kind of a reasonable basis, because in a normal world, the Bank of England would be hiking rates Q1. The fact they're not is, I think, again, a statement much more politically than economically, and this is the key thing. So I wish I had Adam's confidence. I do believe that they're going to fail in the referendum, but there's enough fear out here, and there's enough. There's just this huge shift in psychology globally, away from unification, trade, cooperation, into isolation. And I'm just afraid that maybe a force of isolation in UK are going to take over. If that's the case, that's another black swan that we don't want to have happen. But then cable really can just collapse, because it would be the worst decision they ever made in their lives to get out of the EU. I agree.
That's a
okay.
Can I say something?
Yeah.
Yes.
Sorry, just very quickly. I think the EU referendum is a smokescreen. I think they're going to end up staying. But in currency markets, there is technical analysis, and there is the catalyst, which is the fundamentals. Sterling wants to go down. It's weak. EU referendum is an excuse. I think we will successfully pass it. But the campaign for the exit has been very strong. That will give very good reason for us to stay weak. Here is what's going to happen, I think. Once they vote to stay in, the degree or the extent of the rebound in sterling will be limited, because other forces will be at play. And the very forces that we spoke about, oil, about Russian commodity companies pulling out of the LSE because they're not doing so well. Oil is not a good thing for, bad oil, low oil is not good for the UK. It's one of those things that'll keep a sterling low.
Okay. Dale, we don't want to disappoint our friends down under, so we're going to have to touch a little bit on the Australian dollar and gold as well. So it seems like the Australian economy has been picking up a little in terms of employment. Also, confidence has been growing. They seem to be weathering the storm of that transition from mining into non-mining services fairly well, if I have to say. Now, the Australian dollar has been suffering over the past 2 or 3 days, has broken an important level of support that had been holding for some weeks. I actually noticed in the COT, and I was telling you that, Dale, the other day, that on the COT report, we saw commercials buying on upticks around the 70 cents level. So that means that they were somehow rushing to amass some Australian dollars around that area. That doesn't mean that the Australian dollar is going to recover or has found a bottom. But it certainly is an economy that I'm not sure whether or not you agree, but do you, and I want to ask this question to our panel, do you think that the RBA can possibly get out of its neutral or dovish to neutral stance and start to get a little bit more hawkish, or that is just basically elusive to start thinking about it? Adam, if you want to give your view about the Aussie, and also Gold, if you happen to have a view on it.
Right. There's only one thing I trust less than Chinese economic data right now, and that's Australian economic data. These jobs numbers have been unbelievable.
Definitely. Yes.
The commodity collapse is on. I cannot get behind the idea of the Australian dollar in a sustainable bounce, in the RBA staying hawkish this year. Mines are shutting down. The prices of these commodities, steel is down day after day. It has been impressive how the Australian dollar has held up. But the shift is coming. The pain is coming to Australia. And that, I see it headed much lower. Gold can find a base here. I think, you have a reason to buy gold, but it's the same story in every commodity. We've invested now for 15 years in this commodity super cycle. The mines they're opening up now in Australia, in gold mines around the world, they made those investments 5 years ago, billions and billions of dollars. You have no choice now but to mine and take those things out of the ground. So there's overcapacity in these things. Now gold, it has some value, it has some investment value. It's a little bit different than copper or steel products where the demand just has to be there. But the Australian dollar and the commodity story, I think, is much, much lower.
Okay, Boris?
I'm not as doubtful of the Australian numbers as Adam is. Yes, the commodity story is a disaster, but the numbers have been steady throughout. The story has been a disaster for a year and a half, and we really have not seen the fallout that we were supposed to see. And when we haven't seen a fallout for so long, I tend to, give the benefit of the doubt to the other side of the equation. So for now, as long as Aussie holds 70 bid, I still think it's a buy, not a sell. The other thing that you're kind of seeing is, yes, there's massive overcapacity in China, so on and so forth. But the other thing you see out of Chinese numbers is they're finally starting to stabilize. Manufacturing starting to stabilize. We're not seeing that second wave of depression just yet. So maybe everybody can keep a lid on everything for another 6 to 12 months, and that in turn creates a positive background for a little bit of an Aussie run. Hard to say, but until we break 70, I think you got to stay a bull in the Aussie.
Okay, Ashraf, you were a bit about the Kiwi. Are you a bit about the Aussie at all?
I kind of like the Aussie. I enjoy what Adam said about the numbers, the figures. It's like you trade on them and then you question them later.
There's a pearl.
I actually went long Aussie before the RBA and before the job numbers, and I was lucky that I bought Aussie before those last two job numbers. By the way, as we speak, if for those of you who are listening and are in this, take a look at sterling Aussie right now. It's near the lows, and the markets are falling quite hard. The Dow is falling, the S&P is falling, the euro is pushing, and everything is rising against the US dollar. But as we speak, sterling Kiwi is down, sterling Aussie is down. Sorry for having interrupted myself. I usually do that. But here is the chart of the Aussie. Here is the quarterly chart. What say you? Do we need to speak or no? Okay, so basically this is a quarterly chart. I think there is so much talk about Australia being hit by commodities. What we should remember is that there is the eastern part of the country and the western part of the country. One of them, they are really killed by commodities, but the other part, they still have a very good housing market going well for them. Retail sales are growing. It is the thing that never happened. They were looking for a contraction in the housing market, a bubble. It didn't happen in 05, didn't happen in 06, didn't happen in 010. And in 015, the commodities came in. But the commodities does not impact all the country. Sorry, lo siento, señores. We have to speak the language of the hosts, right? So let me ask you this: if Aussie is showing some sign of a bottom against the U.S. dollar, what do you think it will do against the struggling against the struggling pound? And this chart, you have to be over the age of 21 to watch this. Is here. Okay, so this is the monthly chart. I mean, oh baby, where do I start? The monthly chart, it's got a trend line. It failed here. It failed here. It failed here with a 200-month moving average. We've got a channel, and then I take it to the weekly. And oh man, be careful. Make sure you're sitting down or you're standing up or whatever you don't like to do. And we are testing the lower bound of the envelope on the weekly chart. And then if I take it to the daily chart, you will talk about heads, shoulders, hips, stomach, toes, fingers, and anything you name it.
All right, no colons, Ashraf. Great view. You know, Ivan, if I could just go off script a little bit, we can't ignore what happened in Paris, what happened in San Bernardino, and I think that most of us believe that these are not one-off events, that unfortunately there will be more of this. What effect could more terrorism attacks create in the FX market? What would be the effect of it? Would it be the slowing of economies as people begin to cocoon and not go about their daily lives out of fear? Could there be any impact on global markets and FX if terrorism events continue in 2016? Why don't I start with Val on that?
I was thinking that unfortunately, those kind of events are affecting the market less and less over time. I remember, I don't know you, but the earthquake in Japan a couple of years ago, remember, it was a huge, sad, risky event, and it triggered wild moves across the market. Of course, it's not the same an earthquake that or terrorism attack, but anyway, the kind of risk that it tends to trigger in the financial market should be considered, right? And I believe that as time goes by, we are seeing those events. Something common, not want to use that word, feeling bad saying this, right? But the effect in the market is less and less as the years go by. I don't know, it has to be huge, really huge, to affect the market these days. Unfortunately, the only thing that can happen is some safe haven ban, maybe a day, maybe 2-3 days, and then the market will forget about it. Unfortunately, I do believe that that's what's going on or will happen.
Great point. So the markets have become desensitized over time to these types of events.
You are my English translator. I love you, Dave.
Thank you. Do you feel that way as well, Adam? Not hearing you.
It's very unfortunate the way, like Valeria puts it, but the economies can do just fine in this environment. I don't think it's a big factor for the economy in 2016.
Okay, Ashraf.
It's unfortunate how things are. People, using religion to do things that have nothing to do with religion, and I think that the bond market. That's another reason to expect that the path of least resistance is for yields to go down, the safety of bond yields, whether it is U.S. yields, whether it is Japanese yields, the safety of bonds, i.e. lower yields. And I think, it's very unfortunate, but I think, markets have grown desensitized in a way. I mean, there is the knee-jerk reaction from a falling euro that weekend after Friday 13th November, I believe it was, and weekend on Monday the euro fell. But I think the play is probably in yields rather than than in FX. If God forbid, if and for those atheists who are there, let's not say God forbid, but let's just say something else. I think that if something more spectacular happens, I think gold will get a good bid. We'll get a bid.
Boris,
Okay,
you want to
and
wrap it?
yeah, it seems like time is up. And I thank you all for having attended today's panel. It's been great to have your views. And I just want to remind the audience that we're going to be sharing some slides with a recap of the key points that have been discussed today. They will be available in our site shortly. And it's been a great discussion. We actually been covering a lot of ground. I don't think that we have left much relevant subjects untouched. So again, I want to thank you all. I want to wish you a happy Merry Christmas. We wrap up 2015, and as Dale said, we better buckle up because 2016 also appears is set to be a roller coaster. So Dale, I don't know if you want to add something else before we officially wrap it up.
I think there was great chemistry on the panel. A couple of pretty good co-anchors growing the panel. To me, I really appreciate people taking time out. Thank you, Adam and Ashraf and Boris and Val, for being here with us, especially during volatile market periods. I know that Boris trades 1-minute charts, probably missed about 20 trades. And thank you, Adam, for your great content every week. And Ashraf, besides being compelling, you are very fun to listen to, and your personality really. Thank you for making me laugh today. Thank you for making me laugh, and thank you, Mauricio Carrillo, and for putting this panel together. I think it should become an FX3 tradition, and I was edified by listening to your answers. So thank you very much.
Thanks.
And happy holidays, Merry Christmas.
Thank you.
May pips rain down on everyone that participated and everyone that watched. Have it be a great year, 2016, that pips just chase you down.
Exactly.
Thank you. Same for you and everyone. Bye-bye.
Bye-bye, guys.
Thank you.
Take care, guys.
Thank you very much. Thanks, appreciate it.
Have a good one. Happy New Year.
Happy New Year. And remember, with this kind of volatility coming in the markets, you need to keep this in mind. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use less leverage. Thank you, everybody.
Wow.
Lar will continue.
Okay.
Thank you, my trading warrior brothers and sisters. See everyone soon. Let's have a great 2016.
Thanks, guys. Have a good one.
Bye-bye.
Thank you, Dale.
Keep it up, Dale. Cheers.
So everyone, if you want to stick around for Lar and share your charts, we could do this for about another half an hour. And look forward to hearing everyone's reaction to the panel. In our community, we have some great long-term biases and things to be aware of going into 2016, and it's just around the corner. Well, let me put my charts up here, and I will. Gold is popping with the S&P selling off. I talked about a negative S&P scenario yesterday, thinking that we could trade down towards 1930, maybe as soon as Christmas, that Santa Claus might just be bringing people a lump of coal this year. So here we are. Here's your charts. Failing rally, failing rally. Need to get through this 2000 area. I'm thinking 1930 as a potential target here. No lark today. Okay. Oh, okay. No lark.